Right, so now having talked about the basic setup of the chart, which is fairly straightforward and easy to spot, that's one of the things I like about it. I'm just going to talk about some extra qualification factors, criteria if you like, and also where to set a target, or where I've been setting my target according to the backtests. So I know that I'm going to enter here at 15850, say. So I'm just going to bring up I'm going to bring up the 240 chart now. That's the next one I'm going to go to. And I'm going to find the date on the 240 chart. This is the 4th of April. Excuse me a minute. There we go. 4th of April. There we go. And we entered the chart at 1 o'clock. And this is the 12 o'clock candle. So we entered the trade, or would have done, according to the backtest, at 1 o'clock. So and this is the 12 o'clock 4-hourly candle. So here we are. And the price of 15850. So there you go. That would be in about here. Now, I found that the 21 moving average is a pretty good target point to be going to. The problem is, although I know where it's going now, at the point of entry in real time, I don't know where that 21 moving average is going to go, where the price is going to go, and where the two are going to meet. So, what I do is I just get a line here, and I draw it up at about a 45-degree angle, roughly. It's not an exact science. And I take the 21 moving average going down here, and I continue that line pretty much down there, like that. And I've got a midpoint of about 1.5 on here, 15904. Yeah, it's a big round number, but not to worry about that too much at the moment. Now, that's pretty much a midway point between the two. I suppose you could just actually look at the numbers difference between that place and halve it. That would make sense, wouldn't it? But this is far more fun. So if I'm going to set my target at 15904, I need to make sure that I've got sufficient risk reward to make that viable. Now, my target, so my goals, or my stop losses that I've been using have been 35 points, and I found that that works pretty much for just about all of the setups. Keeps me in the good trades and out the bad ones. So I'm going to have a stop of 35 points. I've got about 54, 55 points on here to gain from my point of entry up to here. So I've got to win. I've got a risk reward of about 1.5 to 1. To be honest, as long as it's a positive risk reward, then I'm quite happy with that. So in that regard, I've got a trade. The next thing I'm going to do is go down up to, or go up to the daily chart. So if we go up to the daily chart here, let's make this a little bit bigger, and find the 4th of April. Here we are. And our entry price of 15850 or thereabouts, which is going to be here. Interestingly, on the 200 moving average, which is quite nice. I'm then looking for the close the previous day. Now we know that the previous day's highs and so on are important, but the close is absolutely critical, and particularly on this trade, it's very, very important. It's quite often it'll tie in with the open as well of this day. We'll probably be closed, so we closed there and open there. So there's going to be some synergy there anyway. But I'm looking the distance between here and here. So if I were to draw, I'm not going to draw a line, but if I were to draw a line where these crosshairs are here at the bottom of this, that would be 15910, or no, just 15907. Look. And then I'm going in here at 159,850. So actually, I've got virtually the same number of points in this gap here as I have based on my target on the 240 chart. Now that's not essential. I don't need the same number of points. That's not what I need at all. It doesn't matter if this close price is up here. All I need to do is make sure that this space here between the entry price and the previous day's close is sufficient to get me to my target point. Now, if this close price is nearer to my entry price than my actual target, then the close price becomes the new target because it overrides what I've done on the 240 chart. However, if that means that then I get a risk reward that is no longer viable, it's not a trade. Okay, so that's that. I'm going to go back to the 240, although the one doesn't actually appear on here. But if, for example, we had a trend line going and cutting through here, like here, we've got one here, we've got a trend line which would actually affect us a bit later on, so we can go on here to there on the 240 chart. So if I was actually entering here, for example, I would have to be aware of this trend line. Trend lines on 240 are enormous. I never ever trade through them or backtest through them because they're just so strong, particularly if they're in a trend channel. Or maybe that's just the way I view it, but it just seems that because there's two of them running parallel that they seem to support each other more. So if there is a trend line going down here, there isn't in this particular trade or this particular setup. So I'm going to, in this particular setup, there's no trend line there to worry about. But if there was, and it was within, it was nearer, it came in this area here, so it was nearer than my entry price, then just as I did with the daily close from the previous day, the trend line would be the new target price. If that target price, again, like we did with the, or like I did with the daily, if that new target price based on that trend line doesn't provide a sufficient risk reward, then it's a no trade. So I've now got my entry based on the first video. I've now assessed my target and also some basic qualifying factors given the distance, and I've got a trade that's good to go. So that's it for this video.